The second wave of the pandemic, which hit India since March 21, has been more catastrophic than the first wave. The daily infection rates peaked at almost 400,000 daily with 20% positivity rate. Also, the mortality numbers have gone up significantly and the healthcare system continues to crumble on huge resources crunch. This has prompted most states to start announcing lockdowns since the end of March 21 and the Supreme Court declaring the second wave as a national emergency. Unfortunately, this time around, no fiscal stops have been announced, which were nearly $20 billion last year, and no such reliefs are in sight. The April 21 sales numbers have dipped by over 25% since March. The euphoria seen in quarter 3 and quarter 4 of last year seems to have ebbed. Commercial real estate, which was expected to continue its resilience in absorption and investments, is looking weak. New launches have been deferred. Banks and funds have again gone on a wait mode. We are seeing a significant dip in the momentum of sales, registration and collections, almost coming to a grinding halt. With on-site labor, some projects may continue construction activities, but availability of men and materials has become harder and costlier. The Knight Frank FICCI Neredco Real Estate Future Sentiment Score saw a 13% decline in the first quarter of 2021 due to the uncertainties of the second wave of COVID-19 infections. The 6-month outlook for the real estate or basis this sentiment score has weakened across all parameters of demand, supply and pricing in quarter 1 2021, even though the sentiment score continues to remain in the optimistic zone. It is hence likely that the stakeholders will hold off till the second quarter of 21-22 to further decide their course of action. The government is aiming to get the vaccination drive normalized and accelerated between October to December this year. Hence, hope is pegged on the second half of this financial year due to the resilience in the home buyer demand. However, there may be more real estate casualties amongst the smaller and weaker players with no finance moratorium, no RERA extension, no IBC protection and negligible cash flows.